Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll be discussing one cost sheet question where two products are involved and there is working notes are required to be taken for considering the sales. Let us read the question. Messrs. Vishal Manufacturing Company manufactures two types of products, A and B. The information for the year ended 31st March 2014 is as under. Direct material per unit. It is given for both the products. Direct labor per unit. Direct expenses per unit. Additional information. Factory expenses are charged at 20% of prime cost. Office expenses are charged at 25% of works cost. 2000 units of product A were produced, of which 1500 units were sold, and 5000 units of product B were produced, of which 4500 units are sold. Selling expenses are rupees 15 per unit for product A, rupees 20 per unit for product B. Company charges a profit 20% on sales for both the products. Prepare cost sheet showing the cost and profit in total as well as in per unit. In this question, we are required to find out closing stock of units for both the products. In case of product A, 2000 units are produced, 1500 units are sold. Unit produced 2000, units sold 1500. So closing stock of finished goods is 500 units. In case of product B, 5000 units are produced, of which 4500 units are sold. Units produced 5000 units, units sold 4500 units. So in case of product B also, closing stock of finished goods is 500 units. Let us prepare now cost sheet. For both the products. Direct material in case of product A 100 rupees. In case of product B, it is 120 rupees. In case of product A, 2000 units are produced, direct material cost per unit 100 rupees, so 2000 multiplied by 100, it is 2 lakhs. In case of product B, we have produced 5000 units, per unit 120, 5000 multiplied by 120, direct material total is 6 lakhs. Direct labor per unit 60 rupees for A and 50 rupees for B. In case of product A, total direct labor will be 2000 units multiplied by 60, 1,20,000. In case of product B, 5000 units multiplied by 50, it will be 2,50,000. Direct expense per unit in case of A 40 rupees, in case of B 80 rupees. So direct expense for product A, 2000 units multiplied by 40, it will be 80,000. In case of product B, 5,000 units multiplied by 80, it will be 4 lakhs. Now we can arrive at prime cost. Prime cost in case of product A, rupees 4 lakh. Per unit it is rupees 200. In case of product B, 12 lakh 50,000. Per unit 250. To this we are required to add factory overheads. Factory expenses are charged at 20% of prime cost. Factory overheads 20% of prime cost. In case of product A, it will be 80,000. Per unit it will be 40 rupees. In case of product B, it will be 2,50,000. Per unit it will be 50 rupees. Now we can arrive at works cost. Works cost in case of product A, 4,80,000. Per unit 240. In case of product B, 15 lakhs. Per unit it will be rupees 300. To works cost we are required to add office and administration overheads. Office expenses are charged at 25% of works cost. Office and administration overheads. In case of product A, it will be 1,20,000. Per unit 60 rupees. In case of B, 3,75,000. Per unit rupees 75, as based on amount of works cost. So we have arrived at cost of production. In case of product A, 6 lakhs. Per unit 300. In case of product B, 18 lakhs 75,000. Per unit 375. We have to add opening stock. There is no opening stock in question. We are required to deduct closing stock. Closing stock of finished goods. In case of product A, we have calculated it is 500 units. In case of product B also 500 units. So cost of goods sold in case of product A, 4,50,000 after deducting closing stock. In case of product B, 16,87,500. Closing stock is valued at current cost of production per unit. In case of product A, it is 300 per unit. In case of product B, it is 375. 500 units of closing stock of A are valued at 300 per unit. Closing stock 500 units of B valued at 375, which comes to 1,87,500. So we got cost of goods sold 4,50,000 and 16,87,500. To this we are required to add selling and distribution overheads. Selling expenses are rupees 15 per unit for product A. and rupees 20 per unit for product B. Selling and distribution overheads total in case of product A 22,500, in case of product B 90,000. We can add this to get cost of sales. Cost of sales in case of product A 4,72,500, in case of B 17,77,500. We can add profit to this so that we can arrive at sales. Company charges profit 20% on sales for both the products. Profit 20% on sales, that is 20 upon 100. That is 1/5 on sales in case of both the products. We have cost here. So we are required to convert rate of profit on sales to rate of profit on cost. One-fifth on sales. So denominator 5 is there. We'll deduct 1. So it will become 1/4 on cost. So we'll add 1/4 to cost of sales to arrive at profit. So we got profit in case of product A 1,18,000 per unit 78 rupees 66 paise. In case of product B 4,44,375 per unit 98 rupees 75 paise. We have added profit to cost to arrive at finally sales. In case of product A 5,90,500, selling price 393.66. In case of product B 22,21,875, selling price 493 rupees 75 paise. This is how we have calculated for both the products A and B the various elements of cost. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.